This is extraordinary amount of duration buying, treasury buying all around the world. Arguably, you could say that for the last 40 years. What would meaningfully change the trend and bring this extraordinary bull market to an end?
Joe, complex question. I mean, number one, the Fed, because they could take action. I think it really has a lot to do with the trade war and the skirmish. But then we have to look at the BOJ and the ECB and what are they going to do with their negative interest rates. We're really in a long-term period of very, very low rates around the globe, and I think it's going to stay here for a while. So I don't see this trend reversing dramatically until we see a big change in the global economies.
Okay, so if the trend is intact and you need some big shifts, some big macro shifts in order to really change a direction, what are you doing in terms of asset allocation? How have you been adjusting things, especially as we're at the end of this month, heading into the fourth quarter?
Well, as Luke just said, we rebalance, and that's a fact. We don't rebalance based on the calendar. We rebalance based on the markets and the way things are moving. Our tactical asset allocation team just met earlier today, and our decision was, as I said before, to stay slightly defensive. We talked about being more defensive maybe later on, but there was no consensus to do that. So we're a little bit underweight global stocks. We're at market weight in fixed income. We're overweight diversifying strategies to our portfolio to really balance out the global growth exposure we have. We don't want to be super defensive. And I really want to emphasize to the viewers, this is the time to rebalance your retirement funds, your 401ks, your deferred comp accounts, your IRAs. Look at those accounts and rebalance them because you're probably overweight potentially fixed income because of the return and maybe even global stocks.